Hi, and welcome back to another episode of the Mortgage Musketeer, where today I'm going to be talking about why we need to pull your credit, but more importantly, I'm going to actually go into a credit report and show you why. So a question that we get a lot when we're dealing with a new client is, do you need to pull my credit? Or is it necessary? I'm concerned about the hit to my credit. Well, a couple things. First of all, if you're concerned about the hit to your credit, you've got bigger issues. Okay, because it's only going to be 3 to 5 points. It's not going to affect you on that credit pull either. So, and that'll recover fast. So it's not like a big hit to your credit at all. The bigger thing is, and why we need to see it, is because we need to know what your actual credit score is. And the only way to know that is to pull it. And most people don't know what it is. And I don't care. Credit Karma's wrong. I have a video on that here. And your Experian and all these other, whatever credit monitoring system that you're using is not going to be accurate. The higher your credit score, if you're in the 700s, the more accurate it may be, but you're still going to need to get it pulled because credit scores and interest rates tend to go in 20 point buckets. So if there's a difference between a 721 and a 719, and so on and so forth. So it's really important that it gets pulled, but also because it pulls in your debt. And most people do not know what is on their credit report. They are surprised. I would say probably 70% of the time when I pull credit, they are absolutely surprised about things that are on the credit. So what we're going to do today is we're actually going to dive into a credit report that I received or that I pulled, and it was actually this weekend, and I got permission to use it so that I can show you what is on this credit report that they did not even know. And what does a loan officer look at when I'm going through credit? All right, let's take a look at the computer. Okay, so this is a credit report that I received permission to use, and I have stripped out all identifying information throughout this entire thing to include account numbers and name and birth, everything. Everything's out of here, so this is basically just a shell, just contains the information, and thanks to my client who gave me permission to use this. I even stripped out the credit scores because that was one of the reasons that they allowed me to use it. Just understand that this person thought that they might have a qualifying credit score, and it was off by 150 points because they were relying on Credit Karma. That is why we must pull credit. And I'm going to show you this whole thing. It's very useful if you watch this whole video so you can understand why we always insist on pulling credit, because most people don't know what's on here. And this person had no idea most of it, or even what we look at on a credit report. So let's go into the first area here. And every credit report is structured a little bit different depending on the credit bureau that's being used or the credit company that's being used. So the information is the same, but the formatting may look a little bit different. But what we're looking at here basically is this in the borrower's name, or if there was a co-borrower, it would be a C, and it has the key down here for what all that is. Now, this is a student loan debt. So each one of these lines here, and we'll see multiple, each one of these is called a trade line. Okay, so in this trade line, this is student loan debt, and we'll see how much that debt is. It's $81,820, and because there's no payment, no term, no payment, that means that it's most likely deferred, which is very normal with a student loan. And what this means, and what tells me as a loan officer, is I'm going to have to take 1% of this, especially since the credit score is low. So that's $818.20 that's going to be added to the debt-to-income ratio. That's another big thing. What is their debt? People don't understand how that works. We have to pull it in so we know exactly what we're dealing with. All right. And then if we go on to the next trade line here, then this is an installment loan and paying $176. It's relatively new. Looks like it was taken out in March. So people taking out a loan and then trying to buy a house, not the smartest thing to do. So they just added $176 to the debt to income ratio, only reporting to Equifax right before they're trying to buy a home. I see this all the time. This weekend, I had another client call me. I was dealing with them back in November, and then the house they were looking for fell through, and they weren't looking until recently. He found a home, wanted to get pre-approved again. He bought a car. He bought a car in January, and now his debt-to-income ratio is too high. So I had to pull credit, see what's going on, and find out oftentimes that people don't. And his response was, "Dang, I had no idea." That is why we're always constantly having to pull it. Now here's another one. Now this is a joint account that they're on, and this is showing lates. So all these lates are impacting credit, even though it's technically still in good standing. These lates are impacting the credit score. 1, 2, 3, 4. So you can see exactly when, and then there's some additional ones out here. So this has been late for quite a while. So the scenario is they're paying this off, okay, to make it go away. But even if they pay this to a zero balance, and you'll see later on, these lates don't go away. They stay on your credit report for 7 years. So you gotta make your payments. The next one is in good standing, no lates. So you can see this is another trade line, okay? Debt to income ratio, and this is a revolving account, meaning it's a credit card. Now, depending on the balance, and this is high credit utilization. I've talked about this before. So I know that they've paid this down. So this is a non-issue, but this is a snapshot in time. So until it reports, it's showing 744. Later on, I was told that it was paid down below 20%. So that will also change what the minimum payment is, which will impact the debt to income ratio. Again, another reason why we need to pull it, because they think, yeah, I paid it, it's lower, it's not reporting. Okay. Now, on to the next trade line. Another revolving charge card, minimum payment. See how it's different? High balance, it's paid down, I know. Here's another one. Now, this is a big one, and one of the things I wanted to show you. This person is an authorized user on this account. An authorized user, which means it's not their account, but they're pulled in and allowed to use it. Well, sometimes that can help if you have an authorized user like a parent or somebody that has a great credit. It'll suck their credit score into yours. Well, in this case, this person has lates. This authorized user account is negatively impacting the credit score. So in this instance, the advice would be get off of here. And they had no idea that this was on the report. Call this person, call this or the company, and get off of this account as an authorized user. You don't want to be on it because it's dragging you down. Same thing with this card. Bunch of lates. All of these lates are having a negative impact on the credit score. Get off of this account as an authorized user. It's not your account. Get off of it. Keeping on going. Another charge card, high balance. It's paid down, but it's not reflected here. But it adds to the debt to income ratio. Another authorized user with lates. Get it off the credit report. This is another card. It's got lates on there, but this is the borrowers. So these lates are going to be on there. So with a balance, even if it's paid off, these lates are going to be on there for 7 years. 7 years. You can't miss payments. Otherwise, it's going to have a long-term impact on you. Another card where it's actually over the credit utilization. Again, I know that they're paid down, but to get to that point, it's going to negatively impact your credit score. And it gives you how much the monthly payment is, which is why we need to. So if I ask somebody what are their monthly debts, most people know how much they owe, but they don't know what their monthly payments are. And you've seen other accounts that were paying higher up here. 14 here, 55 here, 28 here. So it's all over the board. Every card is different. So we have to know what the actual minimum monthly payment is. All right, and then when we keep going, you get the idea. Now we're into, and this is history, right? So this history is going to be on there because this is on your credit report. It's going to be on there for 7 years. Old stuff that you had stays on the credit report, even if it's showing a zero balance, which is why when we get down here to these old student loans and you see there's a ton of lates, and this is not unusual. I see this all the time where there's old lates on the student loans, and then they get it fixed, they get it out of whatever issue is, and then it's back in forbearance, and you still have these lates on your credit report. This still impacts. Now in this case, it's only reporting to TransUnion, okay, but they're still out there from all the way back from 2014 and 15. Right now that'll probably drop off in another year or two, and it's doing less damage now than it did. But that's what I need you to understand. See how old these are. And this account was opened up in 04. It stays on your credit report, so you miss one, and it'll linger. Okay. So they've got other student loans that are in good standing. I'm just looking real fast. There's some other debt. Here's another student loan that had a whole bunch of lates on it, 14 months worth. It's reporting both Experian and TransUnion. It's a little bit more recent, back in 2016, but still has been, a good little bit, 4 or 5 years. And then as we continue down, you'll see additional ones of lates. All this stuff is impacting the credit score. Maybe a little less than it did when it was new, but it's still impacting. Now we get into collection accounts. All right, so in collections, we've got an auto loan that is in collection, and looks like it was repossessed. Something's going on with this. I know what the deal is because I asked about it. I'm not going to expound upon it. But this is something that might be able to be disputed because there's some other things going on with it. But this person did not think that this was on the credit score because in this person's mind it was taken care of. And it is most definitely not. And this is what I tried to explain, is that it's a joint account. So if you are a co-borrower, and I have in my 10 loan commandments, I create a little rhyme for people to remember, and it is, don't co-sign for a loan just to try to help out, because their debt is now your debt and there's no way out. That's the case. If you co-sign for a loan, it is your debt. I don't care who's responsible for it. If you're co-signing, basically you're saying, if they don't pay, I will. And she did not realize that, or this person did not realize that. Okay, so this is another account in collection as an authorized user. Get that off of your credit report. Stop being an authorized user. Call them up, get off of that account. And then we have medical collections. Now, medical collections are one of the easiest ones to get rid of, and the reason for that is because it doesn't matter how much, like this is a rather large medical collection, but that's not added to the debt to income ratio. Nobody cares about medical payments. They do care about how it impacts the credit score, but they don't care that there was an actual medical collection. And because of that, medical collection companies know that they really don't have any leverage. So the only time you ever pay a medical collection is if you do a pay for deletion. And if you call them up and say, hey, if I pay this today for whatever amount, will you delete it from my credit report? And the vast majority will do that because they know they don't have any leverage. Okay. Otherwise, don't just pay it. And we'll see an example here somewhere, I think, where it's at a zero balance, and it does not help you because it actually can hurt you in the short run. So let me see if I can find one. So let's talk about these, and I'll come back to that point. So medical collection. This is another account, an authorized user. Get it off of there. Had no idea it was on here. This is this person's, and it's a medical, so we can make that go away. This is another medical, and they didn't even know they had medical collections. Most people don't know when they have medical collections. It happens all the time. This is another medical collection company, a really easy company to deal with for pay for deletion, medical payment. This is another medical. See how this stuff adds up, another medical. So all that stuff can be addressed. Now in credit repair, they can dispute these, and that's a whole other topic. But they can most likely make these go away without having to pay anything if you have the time. Okay, so there's two ways to approach medical debt. And then this one here is another medical payment, another medical payment, another medical payment. Had no idea all this stuff was on there. It's nickel and diming the credit report. All right, so in this case, let me scroll back up here because I want to show you there is normally something called the date of last action. All right, and normally it's in here. This is old enough where they don't have one. But what happens is if you just paid this and didn't do a pay for deletion, it'll become a zero balance. They're settled, and it'll show zero owed, so it'll be 0 and 0, and that sounds great, but it's still on your credit report. And it updates the date of last action date. So see how old these are? So it's been old enough where it's probably no longer really impacting the score intensely. But if you pay it, it's gonna, there's a DLA, date of last action, and it'll update that. And then even though it's showing a zero balance, it then says, hey, this is a new collection issue. So it's going to have an initial negative impact on you. The key is deletion. So if you're not going to if it's not going to be deleted, it's already done its negative impact to your credit. Leave your medical collection alone unless you can do a pay for deletion or unless you can get them disputed through your credit repair company. Okay, so these are old student loan accounts. See, zero balance. It's taken care of, but it's still on there. Okay, it is still on there, and that's what people don't understand. And they're like, oh, why is that on there? I paid that. Yeah, because it's going to be on there for 7 years before it drops off. And then here's another older account, zero. See, everything's zero, but it's still on there. It still shows all the lates. These things collectively still have an impact on your credit score. Now, we've talked about buying a car. This person tried to buy a car. and ended up having to also, well, I'll leave it alone. They ended up buying a car, but they tried to get financed through a dealership. This are credit inquiries. This is what happens when you buy a car at a dealership. I call it a shotgun blast. Boom, 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 boom. All of these are credit inquiries that have a negative impact on your score because they're gonna, those places, I can finance anyone. Yeah, they sure can. And they're gonna destroy your credit with credit inquiries in the process. And you know what? That's not all. Keep going. Yeah, more. So understand and see how this stuff impacts your credit score. And this is why we have to pull your credit score. All right, hopefully that was a good visual so you can understand what we're looking at on something like that. So as you can see from that credit report, somebody who didn't think that they had a negative credit score as much as they did, they need credit repair. They need a lot of credit repair. And they didn't know everything that was on there. And that is par for the course. That's most of the people, probably over 70%, and I'm being conservative. That is the case, especially with medical collections. Hospitals, they don't hesitate. They can't get what they need. Maybe it went to wrong address. They don't care. They just write it off and send it off to a collection company. And nobody knows. And they're sitting on the credit report and they're wondering how come my credit score went down. So those are things that have to be addressed. The other piece is the actual debt to income ratio. That debt, those debt amounts, those minimum monthly payments, people don't know what their minimum monthly payments are that is showing on there. The higher the balance, the higher the minimum monthly payment. So there's all these variables that people don't know. And of course, their credit score. And we've addressed that. So the answer to, do we need to pull your credit? Yes. Because there's so many things that we're looking at that we need to know what is going on. And in this instance, it allows me to help. This person, I gave them very specific instructions, and they're probably going to be buying a house in the next 6 months because I told them what they need to do, how to do it, and I set them up. And you can't do that unless you pull the credit in. So although that person can't buy now, we're going to put them on the right path so that they can buy in the future. So always try and think of your loan officer as a partner. Now, if your loan officer doesn't do that for you, you need a different loan officer. And on that note, if you get your credit pulled in and they don't take care of you, then there's something called a federal deduplication law. It's a big fancy word for a mortgage shopping bonus. If your credit is pulled for a mortgage a couple times within a certain period of window, they count it as one pull. Okay, so if your loan officer isn't doing you good service, find another loan officer and make sure that they take good care of you. Okay, hopefully this was informational and you understand the big picture of what loan officers are looking for in a credit report and why we need to pull credit. Until next time, it's all for one and one for all.